Good day Forex trader. Your USD Forex signal, extremely bearish below 1.1287. The pair will likely have a bearish breakout, which will be confirmed if it moves below the support at 1.1287. Bearish view. Set a sell stop at 1.1287 and a take profit at 1.1200. Add a stop loss at 1.1335. Timeline, 2 days. Bullish view. Set a buy stop at 1.1315 and a take profit at 1.1400. Add a stop loss at 1.1250. The Euro-USD pair retreated slightly as investors rushed to the safety of the US dollar amid the rising geopolitical risks. It is trading at 1.1300, which is lower than Wednesday's high of 1.1360. Russia-Ukraine crisis. The Euro-USD erased all gains it made on Wednesday as investors reacted to the ongoing tensions on Ukraine. The sharp decline happened after the country announced several cyber attacks of its key government websites and those of banks. Therefore, analysts believe that this wave of cyber attacks will spread to other countries that have sanctioned Russia for invading Ukraine. For example, some of the most recent attacks in the US were on the Colonial Pipeline and SolarWinds. An escalation of sanctions will lead to more geopolitical tensions, which makes the US dollar more attractive because of its safe haven qualities. Indeed, the decline of the Euro-USD pair happened as stock indices like the S&P 500 and Nasdaq 100 declined while gold rose. On Wednesday, Europe published its January inflation data that confirmed prices were indeed rising. According to Eurostat, the headline Consumer Price Index rose by 5.1% on a year-on-year basis as energy prices rose. The core CPI, which excludes the volatile food and energy prices, declined from 2.6% to 2.3%. On a month-on-month basis, the core CPI dropped by 0.9%. The US will publish important economic numbers that will provide investors with a feel of the state of the American economy. For example, the initial jobless claims data will show the strength of the country's labor market. Analysts expect that the number of people filing these claims drop to 235,000. The other important data that will come out on Thursday are new home sales and the second revision of US GDP. Euro-USD forecast. The Euro-USD pair declined to a low of 1.1300 as risks rose. On the 3-hour chart, the pair has moved below the 25-day and 50-day exponential moving averages, EMA. It has also moved to the 50% Fibonacci retracement level. It remains below the descending trend line shown in blue and slightly above the key support level at 1.1287. Therefore, the pair will likely have a bearish breakout, which will be confirmed if it moves below the support at 1.1287. If this happens, the next key level to watch will be at the psychological level at 1.1200. GBP USD Forex signal, more sell-off likely amid geopolitical risks. The pair will likely keep falling as bears target the next key support at 1.3500. Bearish view. Sell the GBP USD pair and set a take profit at 1.3500. Add a stop loss at 1.3600. Timeline, 1 day. Bullish view. Set a buy stop at 1.3580 and a take profit at 1.3650. Add a stop loss at 1.3520. The GBP USD price declined sharply in the overnight session as investors rushed to the safe haven of the US dollar. It is trading at 1.3550, which is about 0.65% below the highest level this week. Global tensions rise. The GBP USD pair declined as the crisis between Western countries and Russia increased. On Wednesday, Vladimir Putin vowed to retaliate against sanctions imposed by several countries while Ukraine announced a state of emergency. At the same time, Ukraine said that some of its government websites had been hit in a cyber attack possibly from Russia. Several financial institutions were also hit hard. Therefore, with Western countries vowing more sanctions, there is a likelihood that tensions will keep rising in the coming weeks. The GBP-USD pair will react to a speech by Andrew Bailey, the Bank of England, governor. In it, he will likely talk about the state of the economy now that the bank has already implemented 2 rate hikes. In a statement on Wednesday, Bailey said that he expects inflation to remain at elevated levels now that energy prices are soaring. The price of crude oil is approaching $100 while natural gas has risen sharply in the past few weeks. The other mover will be the latest economic data from the United States. The statistics agency will publish the second estimate of U.S. GDP numbers for the fourth quarter. Analysts expect the data to show that the economy expanded by 6.9% in Q4 as consumer spending improved. The U.S. will also release the latest consumer spending and new home sales numbers. Economists expect the data to show that new home sales dropped from 811K in December to 806K in January. The other key data that will come out will be the initial and continuing jobless claims data. GBP-USD forecast. The GBP-USD pair remained in the same channel where it has been in the past few days. It is trading at 1.3550, which is a few points above the lower side of the channel. It has also moved slightly below the neutral level of the shift pitchfork tool and is slightly above the 38.2% Fibonacci retracement level. It is also slightly below the 25-day and 50-day moving averages. Therefore, the pair will likely keep falling as bears target the next key support at 1.3500. AUD-USD Forex signal, more upside after crossing resistance. The pair will likely keep rising as bulls target the next key resistance level at 0.7350. Bullish view. Buy the AUD-USD pair and set a take profit at 0.7350. Add a stop loss at 0.7180. Timeline, 1 day. Bearish view. Set a sell stop at 0.7210 and a take profit at 0.7150. Add a stop loss at 0.7300. The AUD-USD pair held steady during the American and Asian sessions as worries on Europe remained and as investors reacted to the latest Australian wage growth data. It is trading at 0.7247, which is a few points below this week's high of 0.7285. Australia wage growth. Wages have become a key part of the Reserve Bank of Australia's, RBA, monetary policy. In past statements, the bank has repeatedly said that wage growth will help to determine how fast the bank will hike interest rates. Data published by the Australian Bureau of Statistics, ABS, showed that the country's wage price index, WPI, rose from 0.6% in the third quarter to 0.7% in Q4. On a year-on-year basis, wages jumped from 2.2% to 2.3%, which was slightly below the estimated 2.4%. These numbers show that the Australian labour market is moving back to where it was before the pandemic started in 2020. Last week, data by the agency showed that the unemployment rate declined to 4.2% while the country added over 12,000 jobs. Therefore, considering that other economic numbers have been strong, there is a possibility that the RBA will start moving in the coming months. Most analysts have put a timeline of the first hike coming in May. Just on Wednesday, the Reserve Bank of New Zealand decided to deliver its third interest rate hike. The AUD-USD pair is also reacting to the rising tensions in Ukraine. In a statement on Wednesday, Australia's Prime Minister warned that Putin was keen to expand his attack throughout Ukraine. Later today, the key data to watch will be the second estimate of the US Q4 GDP numbers. Based on the first estimate, analysts expect that the data will show that the US economy expanded by 6.9% in Q4. The US will also publish the latest new home sales and initial jobless claims data. AUD-USD forecast. The 4-hour chart shows that the AUD-USD pair made a bullish breakout after the latest Australian wage growth numbers. It rose to the highest level since January 13. As that happened, the pair managed to move above the descending trend line that formed the shoulder of the inverted HNS pattern. It has also risen above the 25-day and 50-day moving averages. Therefore, the pair will likely keep rising as bulls target the next key resistance level at 0.7350.